Hello and welcome to the latest in Enlit Asia's interview series. In this episode, I'm joined by Daniel Mallo, Head of Energy, Infrastructure and Metals and Mining Asia Pacific for Societe Generale. We also have the privilege of having Daniel as a member of our Enlit Asia Advisory Board, allowing us to benefit from his experience and insights in developing the summit agenda and all our associated content. Today, Daniel joins me for a general discussion about the state of the industry, the impact of the ongoing COVID-19 pandemic on the power sector, the availability of capital, and he shares with us where he sees the bright spots in the region's power sector moving forward. Daniel, thank you very much for speaking with me today.
Thank you, Simon. Good to talk to you.
We're obviously in unprecedented times at the moment. What's changed in terms of transaction activity in APAC over the past few months?
Yeah, I think businesses always tend to lag a little bit. If we look at the dislocation in the markets, the first markets to react are typically the public markets, the bond markets, the equity markets that are very liquid and that react very, very quickly. Our businesses are long-term businesses, so our transactions typically take months from origination to the finish line. So there's certainly a lag effect that we're still measuring, to be honest. And when I look at deal activity in the first half of this year, it's actually okay. There's a number of things that are still getting done, but to a large extent, those were transactions that were originated late last year and that were already in the pipeline and are working through the motions. I think the critical test will be what the second half of this year looks like and whether new projects are able to get off the ground and provide deal flow for the second half of this year and next year. But I think so far we've seen a good overhang from transactions that were well on the way and that were able to get closed, even though the markets have been dislocated for the past few months.
Mm-hmm, mm-hmm. And how has the power sector been impacted when compared to other sectors?
Well, one of the good things about the power sector is it tends to be more defensive. It tends to be a more defensive sector. Typically, power transactions rely on a long-term power purchase agreement. You have an identified off-taker. You know who you will sell the power to. You know at which price you would sell it to. So in a lot of ways, those transactions have been more insulated from vagaries in the commodities market. So if I look at the spectrum of activities, clearly oil and gas has been highly volatile. We've seen unprecedented movement in the oil prices, negative prices in the headlines in the U.S. for a period of time, or WTI, West Texas Intermediate reaching 1 cent a barrel. So really unprecedented dislocations, and obviously you would expect that capital has shied away a little bit from that sector given the volatility. On the mining side, we've also seen more volatile commodity price movements. So those have impacts on the ability to attract capital. The power sector is more resilient. It tends to be more defensive. It tends to be more structured, more contracted in nature. You're not directly exposed to commodity price vagaries. So I think it's been probably the pocket in our sectors that's been the most resilient to date.
Okay. And what's been the most, I suppose, important way for you that the COVID crisis has impacted projects currently underway?
So I guess it really comes down to the ability to execute projects that are already on the way. So, we have now situations of lockdowns in countries like India or Malaysia and to a lesser extent Indonesia. So I think this clearly puts the spotlight on the ability to conduct, to complete, to progress a construction project. You need workers, you need people to be able to be on site. You need access to equipment. So I think those are probably the more important things. Is there any disruption in the ability to source critical equipment? Power projects need electrical equipment, transformers, solar panels, wind turbines. So the ability to procure those, to ship them, to unload them, to transport them to the site can be disrupted. We have seen projects as far away as Western Australia are being impacted by early disruptions in supply chains in China in February and March. So we have seen difficulties in getting some of those components on site. Secondly, construction crews. India shut down almost overnight. People returned to their home cities, their home villages, and construction sites were vacated literally overnight. So the ability to resume construction, to bring those workers back, and to complete those projects is important. So I think it put a bit of a spotlight on that aspect, the ability to physically continue to build. Will there be delays? And if so, how critical will those delays be? So that is clearly one aspect. The second aspect is projects that were about to start, to get started, and maybe they needed their last few permits, government approvals, permits, sign-offs from the utilities. That also has been disrupted as people went into lockdown. The ability to access those permits, those approvals, has been challenged. So it can also create a delay in the ability to start a project.
Mm-hmm. Sure. And do you foresee any longer-term impacts on the power sector?
So what we talked about is just the short-term impact. So projects that are either starting or already under construction. Longer term, I think it's a more fundamental question. And to me, it's two things probably that are the key elements. The first one is demand. Demand for power. Clearly, the last few months, as work habits have been disrupted, as factories have been shut down, we have seen demand destruction in the power sector, and sometimes fairly dramatic, 20, 25, almost 30% below last year's level. Now, the big question is, how temporary is that demand destruction? And there, I think we will still navigate a little bit through the numbers and through the pace of the recovery. And I am a little bit encouraged by some signals in markets that have exited the crisis a little bit earlier on. So if I look at numbers in Wuhan or Hubei province in China, for example, or in South Korea, actually the demand for power has come back to a level that are comparable to last year. So that is encouraging as early signals of demand recovery. In markets like Malaysia, Indonesia, India, we're not quite there yet. So we still need to see that demand recovery occur over time. So that will be a little bit a question is to what extent will the demand come back? Will it come back in full? Will it come back quickly, or will it come back over a period of time? So the pace of demand recovery will be a factor for future investments in the power side. The second element is probably potentially disruption in future tenders. A lot of what we do in power in this part of the world, in Asia, in Southeast Asia in particular, tends to be driven by tenders launched by the utilities. PLN in Indonesia typically launches tenders for future projects. As those utilities are reassessing a little bit their strategy, as they're coming a little bit under stress at times with the demand destruction that we just talked about, there could be a tendency to delay some of those future tenders. Clearly, a number of the countries in this region will go into a recession this year. The majority of the countries in this region will go into a recession. Singapore, Thailand, Indonesia, maybe not quite, but maybe zero growth or close to zero growth. So there might be a tendency to delay some of those future tenders as economic outlook is less favorable. So to me, I see those two as the key elements for the longer term, the pace of the recovery for demand for power, and whether some of the regulators and utilities might decide to defer some tenders that they would otherwise have undertaken.
What's changed in terms of the availability and cost of capital for the sector?
I guess it's a little bit a tale of the good and the bad here. I think to me, the good is that even through the months of March, April, May, which were probably the peak of the disruption, capital has remained available, particularly for the power sector, and even more so for the renewable energy sector. That has remained the sweet spot. If I look at it's gotten done over those last few months, we were actually able to close a 180 megawatt floating solar project in Taiwan. That closed at the beginning of April. We were able to sign a solar project in Indonesia, a hydro project in Indonesia. So I think the good thing is that capital has maybe shifted around a little bit, but power and renewable in particular has remained the sweet spot to attract capital, and we have seen capital remain available to those asset classes. It may be a more contrasted picture if you move to the oil and gas sector or to commodity-heavy sectors, but I guess the availability of capital has remained high for power and for renewables in particular. That is good news. It's good news for the industry. The cost of the capital has gone up. There's no doubt about that. Clearly, the cost of funding for the banks has gone up. So the cost has gone up. That is maybe the less good side of the equation. Having said that, in my mind, that is really not catastrophic. I mean, if we look at those assets, renewable energy projects, hydro projects, wind farms, solar plants, those are 20, 25, 30-year assets. So yes, you may pay a little bit more today to finance your projects, but over the lifespan of those assets, there will be multiple times to refinance in a more normalized market to lower your cost of capital as you go along.
Sure, okay.
So I still see a lot of value for those developers, for those projects, to proceed ahead today, to be in a position to generate power in a year or so when construction is over, and then there will be multiple windows when they can optimize the capital structure, refinance at a lower cost. So I don't see that as necessarily dramatic. I think there's still a lot of value in getting things done today, in being able to produce, in being able to generate cash flow, even if the cost of capital is a bit higher than it used to be.
Sure. Where are the bright spots for you?
The bright spots are, I see maybe a couple areas. I was talking a little earlier about a floating solar transaction that we just did in Taiwan. It was 180 megawatts, so it's quite sizable for the asset class, the floating solar. There are several more that are on the development that we're involved in Indonesia and elsewhere in ASEAN. I think today that this is actually an asset class for which Asia could lead the way globally. There's more activity for that asset class here in Asia than anywhere else in the world. And it was interesting when we closed the Taiwanese transaction in April. My colleagues, my peers in London, in Paris, and in New York, they wanted to learn about it because they hadn't seen one in their market. So they were very interested in understanding that. So I see that as a bright spot because this is actually one subsegment of the renewable space where Asia is ahead of the rest of the world. And that's great because in a lot of ways, Asia is catching up in renewables to the rest of the world. But actually for this one subsegment, Asia is actually ahead and could influence where the rest of the world is going. So that is a bright spot. The second bright spot is really the acceleration of the offshore wind business. If we look back 2 years ago, there was nothing in Asia in terms of offshore. If we take away China, which is a unique market, but elsewhere in Asia, there was nothing in terms of offshore wind. Today, we have now 1,500 megawatts in Taiwan that are either under construction or operating. So it's gone from 0 to 1.5 gigawatts in 2 years. Quite remarkable. We have the first one in Japan that we just closed earlier this year, 140 megawatt offshore wind farm in Japan. We have developers looking at Vietnam, at India, at Australia. So this has the potential to become truly a regional asset class, and those projects are more sizable, they're bigger, and this could accelerate the energy transition. So I see this as a couple of bright spots here in the region.
Absolutely. There's been a lot of talk, I suppose, since the beginning of this pandemic about the energy transition and the impact of the ongoing situation on the region's energy transition. You've mentioned there that capital is available for renewable energy projects. What's your view on the impact of the COVID-19 crisis on Asia's energy transition?
Yeah, I think it's a good point, Simon. And, in a way, I mean, there are still, the COVID-19 is disruptive. There's no question about it. But if we take it aside for a short moment, if we put it aside for a short moment, I think we are still in a region where the fundamentals are highly conducive. What do we have in Asia? We have, absent COVID-19, but even incorporating the impact of COVID-19, we generally have growth rates that are higher than elsewhere in the world, economic growth rates that are higher than elsewhere in the world. And that will continue. There will be a recovery, and the recovery will be faster in Asia. It will happen first in Asia and later in Europe and in the Americas. So the path to growth will start here again. With economic growth, demand for power is higher than economic growth. So the demand for power again will be anchored in this part of the world. Thirdly, we have unmet demand. We still have in India, in Indonesia, in ASEAN more generally, tens or hundreds of millions of people that don't have access to power today. So even aside from growth, there is unmet demand to be filled. So the fundamentals remain very conducive. The other thing that we've seen in the crisis, and this is across markets, is as demand fell and as capacity was cut. The capacity that was cut out of the systems was the thermal capacity. Where you have variable cost. You have a cost of fuel, a cost of gas, a cost of coal, etc. So we have actually seen renewables being a beneficiary of the crisis, in the sense that those projects have been dispatched. They've continued to produce throughout, whereas higher cost generation has been cut back. So I think, and then the third thing is maybe the broader impact on society. I think more than ever the crisis has put the spotlight on climate change, on fundamental shifts in society. I think it's going to be more ingrained in the way people consume going forward, and that will also be a catalyst for accelerating renewables. I think there's going to be a fundamental mindset shift that the crisis will generate. So I generally think that both from an economic standpoint, from a relative positioning standpoint, and from a society approach standpoint, renewables are likely to be the beneficiaries, and it will result in an acceleration of the energy transition here in Asia.
Okay, that's positive. Government policy and regulations obviously play such a big role in the power markets. What can governments and regulators do to reinvigorate the sector?
Yeah, I think it is actually an opportunity for policymakers, regulators, government to also help in making renewables the winner to come out of this a little bit. And there's two things will happen. Capital flows will continue to move squarely towards the renewable space. So capital, that's where capital will be the most readily available and the most competitive. I think what the policymakers can do is take a cue from that and really find ways to accelerate the development of projects. What is sometimes plaguing the region here a little bit is just the extended time frame to develop a project. And that can happen because of complex permitting processes, complex land acquisition processes. Those are usually the elements, or lengthy tender processes. We talked about the government-owned utilities issuing tenders for new capacity. Those processes can be lengthy, postponed, stopped and restarted. So I think there would be benefits for governments and policymakers to indicate that they want to prioritize renewables in power, accelerated tendering processes, fast tracking permitting. making land available to developers. And I take a cue from India, for example. India has this policy of making solar parks available. So they make land available to developers,
Okay.
and that bypasses a lengthy land acquisition process, and that really has accelerated the growth of renewables. So that's maybe something that in Southeast Asian nations could take a leaf from, and also provide this kind of approach to accelerate the development of the industry. So to me, it's all about fast-tracking tenders, prioritizing the permitting process, and developing and streamlining the land acquisition process. Those things would be very conducive to accelerate the development of the sector.
Okay. Taking, I suppose, government policy into consideration, and as well as other points you've touched on throughout the conversation, which Asian market do you believe holds the most potential for your business, and why?
So in ASEAN, I think what I talked about earlier, catching up, growth, will be very relevant. And I think to me, one market that I think holds potential is Indonesia for two reasons. A, because it's a big market to start with, and the demand should be strong there. But also because Indonesia will have to catch up a little bit. They will have to catch up on accelerating their own energy transition. I think the policymakers are increasingly aware, and they're seeing what's happening in countries like Vietnam, for example. That's made a nice headway into developing a solar power sector. So I think there will be probably a renewed desire in Indonesia to catch up. It's the largest economy in ASEAN. It will not want to be a laggard in that process. So I think that will be a market that will be important. Vietnam is likely to come out of this crisis stronger. I mean, the impact of COVID-19 in Vietnam has been heavily muted. And they're likely to come out stronger, beefing up more manufacturing capacity generally. That will mean even more demand for power. So I think Vietnam should be well positioned. They've accelerated the push into renewables. Vietnam has a very long coastline that will be conducive for offshore wind. We talked about offshore wind and how that can accelerate the energy transition in some of the countries. Vietnam could be a beneficiary of that. They have a very long coastline with good wind resource, and it could be a major market for offshore wind going forward. So I think those are a couple of the markets that I think will probably be winners going forward, and that will attract attention from investors and financiers.
Sure. My last question for you, Daniel, is what are the two or three trends that you see impacting the industry most in the next 5 years or so, and how are you guys aligning to capitalize on these?
Okay, so in terms of key trends, so I think I touched upon a couple of them already when I talked about floating solar. And to me, I see floating solar as being one solution to the thorny issue of land acquisition. Sometimes it's quite difficult to get land in countries like Indonesia or other places. Floating solar can be a solution to that because you bypass a difficult land acquisition process. Secondly, floating solar can also be in conjunction with hydro. This is a part of the world that's blessed with hydro resources. Lots of hydro in the Philippines, lots of hydro in Indonesia, lots of hydro in Laos. Oftentimes those hydros have big reservoirs, and those reservoirs can be put to use to deploy floating solar, and then you can combine really a renewable energy producing assets with both hydro and solar. So I think this will be a trend. A second trend is probably related to the geography of the region, and especially if we look at countries like the Philippines and Indonesia. Archipelago, thousands of islands. Thousands of them are not connected to the grid, and probably will not be connected to the grid in the foreseeable future. So solutions around microgrids, mini grids, are very suitable to this part of the world. And not only on islands, but also in frontier markets like Myanmar, for example, where the grid is insufficient and doesn't really cover the entire nation. I think there will be fertile ground to develop smaller scale solutions, a few megawatts, 2, 3, 4, 5 megawatts, local. Distributed generation. I think that will be very fertile ground. It will be very conducive given the geography here in Asia. And I think that's something that we should take an interest in, and we will. It is a bit more fragmented. It is a bit smaller, so you need to get to critical mass. But I think there's ways to aggregating some of those projects in portfolios to have them make sense. So I think that will be a trend that will accelerate over the next few years in Asia. Mm-hmm. Another trend, and whether that's within 5 years or a little beyond that, but it is clearly a trend that is developing, is hydrogen. Hydrogen as a carrier for energy. And here again, we will have a fairly conducive region with, on the one hand, countries that will be well positioned to produce and export hydrogen, Australia, for example, and then a number of Asian countries that may see that as a part of their future energy mix. So I think if we look at what's happening in the hydrogen space globally, and granted, it still has to move to the commercial scale, and it still has to reduce its cost base to be competitive. But that's something that we've seen happen in solar and in wind in the past. So I think it will happen time, and I think Asia will be fertile ground for this because both on the producing side and on the end user side, those are where the markets will be for hydrogen. So that's something that clearly we will be interested in looking into and then being part of that development. And then lastly, what I mentioned about offshore wind. I'm convinced that this will move from today a single market in Taiwan. In 5 years, I think there will be more than a handful of markets deploying offshore wind in the region, and it will become truly a regional asset class and will accelerate the energy transition in this part of the world. So I think there's a lot to look forward to in Asia.
Yeah, absolutely. Daniel, that brings me to the end of my questions. Thank you so much for sharing your insights and obviously taking the time to speak with me today. It's been a pleasure.
My pleasure, Simon. Thanks very much. I'll talk to you soon.
Thank you.